first up, the French mobile market is changing.
It is indeed a changing. Hi there, Mark. Hi there, everyone. French telecom stocks, they've been rallying on the news of a deal between two of the sector's major players. Bouygues has agreed to sell its network to rival Iliad, which operates under the name Free. It's seen as a preemptive move by Bouygues to head off regulator concerns, this, as it is looking to merge with a third player in this mix, SFR. Analysts say the deal is seen as a plus for the entire French telecom sector, since it eases price pressures. Delano de Souza has more.
The map of the French telecom sector is being redrawn. Bouygues has agreed to sell its mobile network to rival Free for 1.8 billion euros. For Free, getting a hold of Bouygues' infrastructure means they will no longer be reliant on other operators.
Today we're at 8 million subscribers. Having our own network means we can double or triple this number from a technical point of view.
The sale includes 15,000 antennas and is seen as Bouygues' way of preempting French competition authorities. Competition concerns risk derailing the deal, as the combined entity would be a market leader with a market share of 42%. This will also reduce the number of telecom operators in France from 4 to 3. That was the case before 2012, and it's got consumer groups worried.
Consumers don't have a short memory. They know what the market was like with 3 operators and with much higher prices.
The French government is trying to increase investment in the sector and signals that fewer players could help, although it doesn't want to see prices go up.
If tomorrow they agree on a price, there will be a fine to pay the government. And also consumers will need to be paid every cent. That's dissuasive enough in telecommunications like everywhere else, not to work against the consumer.
Cable operator Numericable is also in the running to take over SFR. A board meeting by SFR's parent company Vivendi is planned for later this week.
And staying in the telecom sector, shares in Iliad got an extra push on Monday after it posted a sharp increase in yearly sales and profits. Overall sales climbed by almost a fifth. In 2013, its net profit was at 42% higher, hitting 265 million euros. Free is the new kid on the block of the French telecoms market, and it was launched 2 years ago. At the end of December, its market share had grown to 12%. Let's just take a quick look at those telecom shares and how they ended up Monday's trading after all those bits of news came out. Iliad shares, they soared more than 11%, and Bouygues almost 9%. Shares in Numericable, meanwhile, took a hit as its bid for SFR appears to be facing trouble. And here's a look at some other market winners this Monday. The American fruit company Chiquita is merging with Irish rival Fifes. The combination of the two would create the world's largest banana supplier. The two companies together sell fruit and other produce for $4.6 billion every year. The deal requires shareholder and regulatory approval before it can go ahead for sure. But investors, they're welcoming this deal with open arms. Shares in Fifes closed 43% higher in Europe, and Chiquita shares, they were up more than 10% at the close. And that takes us to a look at the wider stock market picture. In the United States, shares, they closed in negative territory, just by a little bit, though, when it comes to the S&P 500 and the Nasdaq, down 0.2%. McDonald's was one of the companies under pressure after it reported falling sales during February. Now, the picture was much the same in Europe at the close. Downbeat economic data from Japan and China are also putting pressure on global markets. And we're going to take a look at that right now. Chinese exports, they fell 18% in February in comparison to the same month last year. That fall was much sharper than expected, and it pushed China into a rare monthly trade deficit. Authorities blame the Lunar New Year holiday season for this weak result, but some analysts say it can't be the entire explanation, adding to concerns that the Chinese economy is slowing. Meanwhile, Japan has posted slower than expected fourth quarter growth, according to a revised batch of data. The economy expanded at a rate of just 0.2% between October and December. That's in comparison to the previous 3-month period. It's fueling concerns that a massive effort by Japan's government to stimulate the economy lost steam at the end of 2013. And here's another story that we're watching very, very closely for you. Shares in Malaysia Airlines hit a record low on Monday during the search for its flight MH370. The plane was flying from Kuala Lumpur to Beijing when it disappeared early on Saturday local time. The accident is seen to be putting further financial strain on Malaysia Airlines. It's been suffering from tough competition from low-cost carriers, and its losses deepened last year. OK, that is the business news for now. Back to you, Mark.
Marcus Carlson with all the business, as ever.